Well, good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening as we're here now on Wednesday, the 3rd of May, 2023. By the way, before we get too far, somebody sent me this. Looks like a computer. It's got a mouse. You see that? It's for my cat. I hadn't been in my office, honestly, since before the beginning of the year. This was sent to me, I understand, before then. I went there the other day. I couldn't believe this when I saw it. They even took a picture of this for my kitty. It is wonderful. It came from Canada. There was no name on it. I have no way to thank you. I appreciate it. I can't figure out how to thank you. So whoever it was, I'm just going to put it there. My cat loves it. She plays with it next to me. Now, day in and day out, we're amazed at how much she likes it. Here she comes, in fact. All right. So away from that and back to the world of finance. I was right. I predicted the Fed would go 25 basis points. I know there were a lot of people that thought I was wrong. I hear from you. And no, I was right. Now what the Fed is doing is they're removing some key wording that says, oh, they're not locked in, that they have to raise rates further and that the next moves will be tightening. Last I saw, what is wrong here with me? There is something wrong. Didn't they say all the way along they're data dependent? So they're not committed to upside or downside. They're committed to being data dependent. Next thing that I heard that bothered me today, the banking system is stronger than it was in March. Which day in March? We had 3 banks fail. Now, I got another problem. PacWest. Did you look at it tonight? If not, go in the aftermarket, take a look. The stock, just before I came on, was down 58%. They're looking for a savior, quote, suitor. This is another bank that might go and bite the dust. That would be the 4th if that's the case. And the system is better. No, it isn't better. The system is stronger for the big banks. The system is stronger probably for the medium tier larger bank. The system is not stronger for the niche, smaller bank, and they are plentiful and they're needed throughout the country. They do a massive amount of lending. Part of their problem is how their portfolios are. Part of the problem is you can go out today, as of before today, because the market is rallying, so interest rates are falling a bit. But you could get 5% in theory here going to a money market fund. Well, if you look at most of those banks, what do you think they're paying you? Last I looked, you're lucky if you get 2%. Lucky. So they're keeping that, and you say to yourself, I got a lot of money there. I'm going to move it to a money market fund. How easy is it to move it? Honestly, you take your phone. If you're like I am, I bank online, I hit it, move it there, it's gone. Move it to the money market fund. I don't know if it takes a minute. That deposit is gone from the bank. So the bank's in a dilemma. If they don't meet market conditions, if they meet it, they make less money. If they don't meet it, the deposits leave them. Once the taint becomes, why would you leave your money at PacWest tonight? And then you have Alliance, you have another bank behind that might be one of these. I am telling you, I'm not buying this theory. And that's, I think, part of the reason that we're up in the bonds and notes. And I know you're going to say to me, and I'll give you the credit, maybe you're right. Ira, you don't know what you're talking about. That was it. The Fed is through, and interest rates from this point are going to fall. Well, I can't argue with you on the 30-year, 20-year plus. I can argue with you on the 2-year. I can argue with you on the 6-month. The 10 is one of those in-between numbers that I don't know. If you're looking at the energy markets, why are they down? Well, because let's think this through. The Reserve Bank of Australia raised its rate. Today we went up. Tomorrow morning, the European Central Bank, I'm sure, 99% sure, that they're going to go up at least a quarter point. And next week, I expect the Bank of England. Now, as each bank raises rates and they make business rougher, do you really need as much energy to run factories and so on? Because you're getting less orders probably. That's the way to look at it. And don't get me wrong, there's going to be a number here where you want to buy gasoline again. It's coming. Pretty soon the hoarding begins, where now you got to build the inventory somewhere because the summer demand isn't going away. That, to a degree, especially with low prices, going to be inelastic. Families are going to say, hey, gasoline's a heck of a lot cheaper, whatever a heck of a lot means, and away you go. Remember, it doesn't equate penny for penny with what a futures contract does. As for the dollar, well, I happen to agree that we're getting close to the point where a pause will happen. I am not in the camp yet, I have no reason to be, that we are going to cut rates in 2023. I know that the Fed watch page at the Merck thinks there's 2 of them coming by year end. Okay. They also didn't think for a while there that we'd get this 1/4 point hike. I'll stay with my own thought process. I'm comfortable with it. When we look at the S&P, the market is reacting a little bit to the downside. So that flies in the face that, oh, we're through with the rise in interest rates. I think the market's nervous about PacWest. At any point, what if you wake up and another bank bites the dust? And I know what you'll tell me. Ira, 3 of them did it. There's no impact. The market's used to it. It'll go by. I can't argue that. It isn't good, but I can't argue that. So if we back off, I'm going to look for support around the 40.58 level. As we take a look at the action, you're caught between this break low, this rally high, and it's been a whipsaw ride. What do I tell you going into these reports? The smartest thing you can do is you're not going to be able to dodge that bullet train coming down the tracks. You think you're quick enough, you're not. And that's what happens to these traders. I see it over and over. The beauty is running and owning a division of a brokerage firm, I get to see what people are doing in the end results. And the guys that are what I call the smarter traders, they're not positioning for that. They step back, then they come into the market to try to pick up pieces if they're there to be picked up. You can see the higher high, lower low. The market's having trouble at the 18-day average. It did get over it. It got under it. It's not able to really break through so far these averages, the 100 and the 200. And what is stopping the market is the lower Bollinger Band up to the upper band. If you don't agree with me, terrific. But that's what I think is going on. And now momentum's down. No trend, bias down into the support of the lower Bollinger Band. When we come to the NASDAQ, lower band to upper band and right back to the 18-day average. That's my kitty that you're hearing. She's playing with that computer. She loves it. The market just fighting at the 18-day average of closes. In the micro mini Dow, the market down, oversold, down to the lower Bollinger Band. You were just at now remember this, in the past, 8 days, 7 days, something like that. Lower band, upper band, lower band. And you want to catch those trades. The only way you catch them, let me explain it, is doing everything wrong. You're a bottom picker to catch it. You're a top picker to catch the break. You're that good? You're it. You're it. You don't need me. Why are you watching me? You're that good. In the Russell, I am still in the bear camp. It is oversold. That is what it's got going for it for support, down to the lower band and oversold. But it looks terrible as a chart, and it looks to me like it still wants to work lower. In the bonds, you're now at the upper band. So if you were with me, sitting next to me, and you're up there and you're going to say, look at Ira, this thing's going to go. I'm giving you that rib, breaking that little rib that you have right there. Maybe it's a big one. And saying, really, you want to buy into the Bollinger Band? You're going to be wrong 95% of the time. 5-year note, same thing. You're over it. You can be over it a little bit. It's okay. But over and over, you'll pull back in it, or if you're under it, you'll pull back inside of it. Let's see if I can get one here. Here you go. That doesn't mean you can't go the other way, but you're not, under the algorithm, going to stay above it or below it for very long. Maximum typically no more than 5 days. Can it get outliers? It can, but typically no. Go and count. You will see what I'm saying. In the dollar index, you got to the upper band yesterday. What were you supposed to do? We were here. I was telling you this. That's where I think the pros came out. If they were long, they're gone. And boom, look at that size move. Did they get hurt? Not as the pro. If you learned you're coming out of shorts, you're coming out of shorts, you're coming out of longs, the idea. Now, in between, how do you get long and short? Well, we have courses on to help you figure that out for yourself. In terms of the eurocurrency, no, you got up to the upper band. I'm bullish. This is where I'd be telling my clients, out. Would I tell anybody to go into today's reports? Zero. That's not going to happen. In the British pound, okay. Now you got to start thinking next week you've got your Bank of England meeting. What's that going to do? You're already at the upper band. Probably profit taking in front of that taking place. In Bitcoin, neutral. If you can close over the 18-day average of 29,132, then the bias turns up and the trend up. You're not there yet. In crude, well, now the differential's widening. We got into the 340s in the differential. Now they're widening out again for a change. But look at how this market has just gone into a state of collapse in all the energy markets, all right? It's one after the other. Look at the gasoline. For those of you that wrote me that are my subscribers up here, and I was telling you, no, in fact, it was up here. You're going, Ira, I'm thinking of buying again. And I'm going, no. And I even said, I thought the weekly charts had a good chance of holding the 18-day average. They didn't. They weren't to buy there. You had the dailies down, the weeklies up. There's nothing to do. You were testing support. You're waiting for your next chance. If you're a seasonal trader, the seasonal buy that comes in for the summer is this week, according to the Moore Research Center. Go look them up and you can get your own data from them. I've been a subscriber for decades. By the way, do I trade off of that? No. But I like to know what the seasonals are. And then I look, and is that another one of the tools that I'll filter in if I'm looking at grains or energies, gasoline at this time of the year? You can count on it. But I look at the patterns, I look at the chart, everything goes in. The more information that doesn't conflict with other information you have, the better off you are. The moment it conflicts, you have a problem. There's a difference between filters and things that conflict. I don't want on one chart an MACD, a slow stochastic, and a relative strength. No way that I want it. Higher high, right into the Bollinger Band, now the lower band. No, I don't want to do anything. This is that time of the year, and I've said it to you how often, that gasoline's in no man land. You're not hot enough to get demand for it in one way, and you're not cold enough where you need a lot of heat in another way. So what you're doing is you're building supply. Tomorrow we get, in fact, a report on that. We'll see where that carries it. So, as I said, I was going to write a detailed report tonight, and I've done it. And I'm giving my traders and those that follow me a pretty good idea as to where my thoughts are, why they're there, give you some ideas as to where we're at, waiting for the trade setups. Don't know which way they're going to go yet. I'll be honest with that. But I've written an awful lot on it and given you the points. I also highlight what happened in the Fed statement and then in the press conference. And I do it in bullet points, so you're not sitting there reading volumes of words. You don't need that. What you want to read are the bullets and get an idea as to what it is so that it makes an impression and you're going, that's what he's talking about. Then I'll back all this up in the morning with my morning videos, and over the weekend, my weekend video. I want to give it to you. If you haven't tried it before, I want to give you 2 weeks of it. You can take it from there. There's a cursor up here. If you have a cursor, move it up to the top. You'll see an icon. Give it a click. Go to our website. Under free offers, it's there. Can't be any better. I'm Ira Epstein. Again, whoever sent that computer toy, thank you. I'm Ira Epstein. I'll see you tomorrow.